Well, for more on the deficit and cutting the nation's debt problems, we're joined by Roger Altman. He's the chairman and founder of Evercore Partners and, of course, the former deputy Treasury secretary under Bill Clinton. Roger, a friend of the show, always great to have you back.
Hi, Betty.
Is Mohammed being much too critical of Obama?
Well, I don't agree with the way he put it, although I'm a big fan of his in general. I think of it more as the beginning of what will be a long process, and that the Ryan plan sets out one bookend. The Obama plan now puts in place the second bookend, and that frames what will be that frames the negotiation. It's going to be a very long negotiation. I think the chances of actually resolving it between now and the mid-June date that the president talked about are extremely low.
And nearly impossible, perhaps?
Nearly impossible. You never say never. And that all this has done is begin this debate, because it's an extraordinarily difficult subject, as we all know. And I think we now see the two ends of it, and that's fine. That's how any negotiation begins.
Right. Well, having been in Washington for so long, when the president says June, what do you think the likely date really is?
Well, there's a moment of truth with the debt limit, because unlike budgets, whether it's last week's fight over the 2011 budget or what will be a very difficult process on the budget for next year, 2012, you can always pass a continuing resolution, buy some more time, and in effect, delay it. You can't do that with the debt limit, because there comes a moment, Secretary Geithner says it's mid-July. I would assume that it could be moved back a bit. But there comes a moment when there's no more chance to defer it, and you have to pass a bill to expand and extend the debt limit. And that will be, to me, the next big moment of truth, because it won't be possible to pass a so-called clean debt limit. In other words, just vote on the debt limit, nothing attached to it. There's going to have to be a big
Something
bite
attached
out of this deficit reduction, challenge in exchange for passing the debt limit. So that, to me, is the next great big deadline. Let's say it's July-ish.
So mid-July then.
July-ish.
But, we've passed the debt limit. We've raised the debt ceiling every single time in the past, right? So why is this time why is that so much in doubt on Wall Street? Why?
Well, first, I don't think it's in doubt that the debt limit will be extended, because no one, whether it's the most rabid Democrat or the most rabid Republican, is actually going to allow the United States to default. Everyone appreciates, I think, or almost everyone, how catastrophic that would be. And incidentally, I don't believe personally the markets are going to take seriously that risk unless somehow this process gets way out of control. So I don't think the passage ultimately of a debt limit bill is in doubt. The question is the terms which surround it, and the amount of deficit reduction which has to be attached to it in order to get the votes, especially in the House of Representatives. Well, in my judgment, there'll be, if you think about the whole long-term deficit challenge as an apple, there's going to have to be a big bite out of that apple in order to pass the debt limit bill. In other words, just to get the votes. And the tricky question is more political than substantive. Which party has more to lose if it goes right to the end, and the public begins to think that the Congress is trifling, if I could put it that way, with putting the United States in default? Which party has more to lose? We don't know that yet.
Is it clear to you yet?
No, because we don't know how it'll evolve between now and then. July, as you well know, by Washington standards, is a long way off.
That's right. I can call you a centrist Democrat, can I?
You can.
Okay. So do you think Obama made a mistake yesterday in coming out and criticizing the Ryan plan right away?
No, because the Ryan plan is a very flawed proposal. Look, the president's plan isn't perfect either, but the Ryan plan is flawed at least in two fundamental ways. One, it doesn't touch defense. And we're spending about $660 billion a year on defense. I don't know anybody who doesn't think there are ways to extract efficiencies from the defense budget. And so to take defense and put it off the table, I think, is a flawed approach. Number two, there's no revenue whatsoever in the plan. And if you look at the Bowles-Simpson framework, which most people think was a very fair one, or lots of other frameworks, Bowles-Simpson, I think, had the same ratio of spending cuts to revenue increase that Obama had, 3-to-1.
Right.
But the idea that defense is off the table and revenue is off the table and let's solve it elsewhere, I don't think that's a very a fair or sensible approach. And so I think it's okay to criticize the Ryan plan.
Why do you think, a lot of guests have come on and talked about how great the Bowles-Simpson plan is. And it doesn't seem to be taken seriously in Washington by either side.
Well, I don't agree with that, Betty. I think that let's step way back. here's why this whole thing that we're talking about this morning is good news. 6 months ago and earlier, deficits and debt were not center stage in Washington. They were off to the side with a lot of people in think tanks and so forth talking about it. Now, it's the issue in this country. And that is a really good thing simply because we're on a very dangerous path in terms of deficits and debt, looking at debt exceeding more than 100% of GDP within 10 years. The IMF says even more than that. And those are levels associated with Italy and Greece. It would be very bad for the United States to actually go down that road all the way. So this is a good development, a healthy development. And I think Bowles-Simpson had a lot to do with pushing this to the center of the stage.
Well, the New York Stock Exchange and Deutsche Börse are stepping up their campaign to win shareholder support for their planned merger. 4 people with direct knowledge of the matter say that the exchanges are considering offering financial incentives to investors so they don't support the Nasdaq's bid. We are back with Roger Altman. He's the chairman of Evercore Partners, who is advising the Nasdaq on its unsolicited offer. First off, Roger, what did you make of the NYSE's response and basically rejecting the bid outright from the Nasdaq?
Well, speaking just for myself, Betty, I expected that response because this is probably going to take quite a while. Our firm just finished advising Sanofi Aventis, for example, on the Genzyme situation. It's analogous in the sense that it was there were unsolicited aspects of it,
right.
And that took, I believe, 10 months. So my own expectation is this is going to take a while, and
so it could be 10 months or so.
Well, I'm not sure how long, but it's going to take a while.
Okay.
And so I think the New York Stock Exchange response was very predictable in light of that.
We talked with Duncan Niederauer earlier this week. I just want to play for you what he said about the proposal.
This notion that we have 2 competing offers is kind of nonsensical. We have a merger agreement with a partner that we came to after a thoughtful, proactive, strategic discussion, and we have a competing proposal that's kind of loosely worded that promises a lot of value down the road.
So he calls the Nasdaq bid loosely worded and says basically it's nonsensical to compare the two.
Well, ultimately, let's hope the market decides. And by that, I mean shareholders ultimately vote and ultimately, make their own judgments as to which they think offers more value. At the moment, the market is valuing the Nasdaq ICE bid substantially higher than the Deutsche Börse New York Stock Exchange agreement. That's evident. Anybody can see it. So what I would say is let's let the market decide. That'll take a while before there will be shareholder votes here, but let's let the market decide. And shareholders can decide between which they think offers more value.
But what Niederauer is trying to say, though, is there's not enough information or that there wasn't enough proposed initially to even make any type of decision on it.
Well, if the market thought it was a non-bid, Betty, they wouldn't be valuing it at the level they are. I think right now it's very obvious that the market views the Nasdaq ICE bid as more valuable than the Deutsche Börse New York Stock Exchange agreement, but my simple point would be let the market decide.
Roger, to the extent that you can, tell me how it's going with the Nasdaq discussing it with NYSE shareholders. What's going on there on that front?
Well, I really actually can't get into that. We're not going to play out their strategy, Betty, right now on your show. As much as I know you'd like that.
As much as I would love that,
yes,
right?
I'm not going to do that.
Okay, but we know, of course, this is going to be protracted, and as you say, could be as long as other deals.
It could be. We don't know for sure. It could be.
Have you started talking? There's no discussions yet with regulators or anything like that, right? On that front, have there been?
Well, I think all parties here have briefed regulators. Bob Greifeld of Nasdaq and Jeff Sprecher of ICE have had some briefings with regulators. They went to Washington shortly after they announced their proposal. And obviously the New York Stock Exchange, in connection with its own Deutsche Börse agreement, when it struck that agreement, has done the same.
Okay.
So there have been various briefings, sure.
Okay, but no general sense on where they would lean or anything like that at this point.
I don't know.
It's very early in the game.
Yes.
Quickly, though, I know you also advised Lubrizol, right, in the acquisition or really the sale to Berkshire. More news out about the timeline. Lubrizol convened the special board meeting at a time when David Sokol was buying shares in the company. I know you've called this whole incident unfortunate, right?
Well, first of all, speaking for us at Evercore, we had, of course, no earthly idea of any of this until the news broke. And to the best of my knowledge, neither did Lubrizol. So this was all news to everybody, at least on Evercore's side and on Lubrisol's side. I think the whole incident, as I said before, is unfortunate. And the reason I think it's unfortunate is because, I've had the privilege, I would describe it that way, of dealing extensively with Warren Buffett and with Berkshire Hathaway. We represented Swiss Re when he rescued Swiss Re. We represented Burlington Northern in last year's enormous merger. And of course, just finished representing Lubrisul on this merger agreement. So I've personally dealt extensively with Mr. Buffett.
Right.
And I have a tremendous respect for him, and I think Berkshire Hathaway is a great company. So I view Berkshire as a victim.
What do you make of this, of this jobless claims number? Back up above 400,000.
Well, we'd all like to see the number down lower than that. But I think week-to-week differences aren't terribly profound. And obviously, we're in a process of healing in terms of labor markets. Unfortunately, it's going to take a long time. We saw a pretty good jobs number last month. Obviously, 216,000 was the best number in a long time. We've seen, I think, 159,000 new jobs created on average over the last 3 months. That's a lot better than it's been. And the unemployment rate obviously is down to 8.8%. Everybody's expecting it to continue to trend down.
Right.
So I think we're in an improving labor market. This is not a great number that you just reported. But the main point, I think, is it's A, it's improving, but B, it's improving slowly.
But a CEO at a company, flush with cash, is going to want to do what first? Not hire, right? They're going to want to do what first with their money? I
think hiring is restarting around the country in lots and lots and lots of places. I don't think it's as simple as one or the other, Betty. I mean, if large companies do a whole series of things at once,
sure,
they may be. I think in general, hiring has commenced.
But you think it's coming to the forefront of their minds now, more?
It depends on the business, of course. But in general, yes. And why? Because compared to 6 months ago, when there was great uncertainty about a double dip, now the sense in the business community is that recovery is on solid ground. The risk of slipping back into negative territory is close to zero. So there's more confidence about the medium term, and that's the basis on which people tend to hire. Mm-hmm. And I think hiring, has in a lot of places around the country resumed. I spent a fair amount of time in the Midwest. I was in Detroit a couple of days ago. I was in Tennessee just 2 days ago. And in general, around those parts of the country, people are feeling better about the economic outlook, and there's a better attitude toward hiring.
Okay. Roger, let's get just quickly back to that Lubrisul Berkshire, because I kind of rushed you a little bit. We were heading against the break. But basically what you were saying is that you're surprised, right, that this has happened at Berkshire. Some have said, has Warren Buffett lost his grip at Berkshire? I mean, there's big conclusions being made. Are you surprised, though, that this has happened at a company like Berkshire?
Well, first of all, let me talk to the question you raised a moment ago. Has Warren Buffett lost his grip? Absolutely not. I mean, he's very smart in taking this step on Lubrisul. It's a terrific company. In many respects, it's analogous to Burlington Northern. They're not the same industry, obviously, but the analogous characteristics, market leadership, the kind of competitive strengths that he likes to see, very strong management, and so forth. So I don't think he's lost his grip whatsoever.
Not his grip on valuing companies, but more, there's been a lot of issues raised at Berkshire in the last several, year and a half. You had, the Goldman Sachs, and whether or not he's, mixed in with, with the reputational risk is what I'm saying. Losing his grip on the reputation of Berkshire.
Well, I would say, Betty, this David Sokol incident is, no matter how you slice it, unfortunate. Is it good for Berkshire? No. Does it call into question whether Warren Buffett has lost his grip? However you define that, I think the answer to that is also no. And as far as the Goldman Sachs investment is concerned, that's one of the best investments I've ever seen. Look how well he did on that investment. So
monetarily, yes.
Yes, but
it generated a lot of publicity that was not favorable.
I think Berkshire shareholders are pretty happy about that, in general. I'd give him high marks for that investment. I think it was very astute, classic Buffett.
Roger, great to see you. Thank you very much for stopping by. I know we made you stay a little longer.
No, it's my pleasure.
Roger Altman of Evercore Partners.